I am now joined with Tara Dziedzic. She is the head of U.S. listings to talk more about the overall market. Now, good morning, Tara, first of all.
Good morning, Trinity.
It's great to have you. I know that you were just looking at some job numbers right now. But first, let's talk about inflation. I know it's widely expected that the Fed is going to keep rates the same, but I mean, what are you looking out for? What do you anticipate here after Jerome Powell speaks?
So rates have been steady since last July, and the mantra was really higher for longer for over the last year plus. In December, a little pivot, definitely acknowledging that higher rates for longer could potentially trigger a recession. So now I think the Fed is going to hold things pretty close to their chest on what the plan is, really sticking to the economic data and allow the data to push us on the path forward. But the market's already expecting some significant cuts this year. So I think, focusing on the data will be the key messages.
And what do you think, well, actually for 2024, how many rate cuts do you anticipate for the rest of this year?
Well, the market has factored in about 6 rate cuts. So I think the tempering expectations a little bit. I think average economists expect between 130 and 150 basis points now. And the question will be, when will the rate cuts start? When will this be triggered? Will it be March, or will the Fed push to spring, summer before reducing the rates?
And obviously the Fed isn't the only thing that's moving the markets, right? We're seeing earnings come out right now. What do you think that we can anticipate from those?
So we're in the thick of it. This week alone, more than 20% of the S&P 500 components report. Just last night, we had some of the big tech names report. The results on the big tech names last night wasn't alarmingly disappointing, but there was some pressure in aftermarket and before market this morning. But broadly speaking, earnings results have been solid. Top line has been slightly under pressure, moderating on the revenues, but companies have been really focused on cost, on financial discipline, operational discipline, and efficiencies, which has really helped the bottom line, and companies meet the earnings expectations better than the revs.
Now let's talk about the January jobs report. I mean, there's some anticipation that there's going to be a lot of layoffs, especially in the tech sector. I mean, what are you seeing right now? What do you think we can expect come Friday?
So some data out this morning, it definitely points to a cooling job market and release of some pressure on the wage pressures. So coming on the backdrop of the jobs jolts number last month, that was higher than expected. But this morning, ADP reported 107,000 new jobs versus expectation of 145. So definitely lower there. And then the costs. So keeping employees and then new employees, the wage came down a little bit from last month. We also, as you mentioned on Friday, we have the BLS data coming out. That we're expecting 175,000 new jobs, which came down from 200, and the expectation is down from December, which was 216,000. But it just shows that there's a deceleration in job growth and then a release on the wage pressures. But when you take this against, pre-COVID, we're still in a really strong labor market and things are looking good.
Oh, amazing. And just quickly, we have about 90 seconds before the bell. So, tell me, what do you think investors should look out for come the rest of 24? What are the probably 3 biggest points that they need to keep an eye out for?
Yeah, definitely earnings, corporate earnings, and how companies are responding to the rate environment. Real estate is something that we always look at, and the labor market. So many of the things we just discussed, I think it will be an amalgamation, a culmination of a lot of really important data factors and how companies perform within this environment, that we'll see how things go for the rest of the year.
A lot to look out for. Thank you so much, Tara, for joining me.
My pleasure. Thank you.